GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's more organized than the boys' trip you swear is happening, but nobody's booked flights. I'm your host, Jay Hamilton. It's Friday, April the 25th. For the first time in months, there's some optimism in the markets. Everything is green. The question is, are we back or is this just a short-term rally? Today, we are joined by Austin Reid, the global head of revenue and business at FalconX, one of the world's largest institutional digital asset prime brokerages. In addition to getting Austin's thoughts on the current rally and the current market setup, we're also going to speak to Austin. He was recently in DC at the SEC Digital Asset Roundtable. We're going to get his takeaways and his thoughts on upcoming legislation. We're also going to get his thoughts on Bitcoin, where he sees that headed, and the evolution of the crypto market as a result of institutions coming in. Austin works very closely with a lot of institutions, so we're going to get a sense of what is happening on the institutional side. Before we jump in and hear from Austin, if you guys want to hang out with me every day and talk to me and my team directly, join our Telegram group, hit the link in the show notes. Would love to hang with you there. Also, we're doing something bold right now because we've got serious conviction in our thesis, which is that Bitcoin is going to reach new all-time highs this year. And we're betting on that with real money. So if you join Milk Road Pro before the end of April, you will get 20% off. Not only will you get 20% off, but if you stay subscribed through October 31st, 2025, and Bitcoin has not reached new all-time highs, we will give you a refund. Today's episode is brought to you by MoonPay. Trade crypto fee-free, fast, and on your terms. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, Austin, welcome to the Milk Road Show.
Thanks for having me, Jay. I'm looking forward to the conversation.
Likewise, my man. Likewise. Okay, just for our listeners who don't know you or don't know FalconX, give us the TLDR on what you spend your day just doing.
Perfect. I'll give a quick overview and then we can dive into markets, which I'm sure people are more interested in hearing about these days. So just real quick, FalconX is an institutional prime brokerage and trading firm in the crypto and digital asset space. Today, we're moving over $1 trillion in volume annually. Options business, 12 to 15% of global crypto options volume. It's a significant amount of trading activity purely on the institutional side of the market. And we work with everyone from large ETF issuers, asset managers, banks, hedge funds, more crypto native personas like venture capital firms and miners, and really providing a full range of products and services for them across trading, credit, custody, and a technology platform to facilitate that single one-stop shop solution. So that's where we sit within the ecosystem. Me personally, I lead our global growth efforts across go-to-market partnerships, marketing, and capital raising. So fortunate to touch a wide variety of kind of different areas within the ecosystem. And like I said, looking forward to the conversation.
Fantastic. Okay, let's, as you said, what everybody wants to hear right now is markets and macro. First question is, how do you feel about this week? Obviously, we're seeing green in the markets, both the crypto markets and the equities markets. First time in a while that we've seen this many days of green. How do you feel? Do you feel optimistic? Is this like, hey, we're back, let's go, bull run is on? Are you cautious still? What's your view?
Yeah, it's so funny. This sentiment, both in crypto and macro, is so cyclical and moves very quickly, right? And so it's nice, like you said, it's nice to see some green days. I think both for people at FalconX are generally, believe in this crypto space. And then a lot of our customers, have long positions within the market too. To take a step back and look at where we are, to your point, I think macro is driving the majority of market right now, right? And I think the interesting thing that you've seen specifically around BTC is Bitcoin perform better and better relative to equity markets right now. And so I think there's optimism on Bitcoin's relative performance on some of the net new capital inflows and specifically around Bitcoin ETFs. But I think it's too early to say that we are back in a bull market per se. I think macro is still what most customers are watching right now.
And what's your take on the macro setup? Are you of the view that we're going to get through this and we're going to avoid a recession or a shift in the business cycle, which is definitely, we're teetering on an edge right now, right? Like we're okay, but when if this continues for too much longer, and you're already seeing it in the soft data of a lot of businesses pulling back spending, preparing that there might be a downturn. Obviously, tariffs, sure, maybe they're transitionary inflation in the long term, but in the short term, they create inflation because they just create such a mess of the supply chain. So, where do you think this all ends? Do you think this ends with, hey, we're going to get through this and it's like no big deal and we're going to be back to a bull market? Or do you think we're headed down a new path as a result of these tariffs, which might stick around for the long term?
Yeah, let me try and anchor my perspective in what I'm hearing from customers and institutions within the markets here too. Because, like I mean, you've referenced this. It's difficult to predict even what's going to happen next week, right? Within these market conditions today. But if I zoom out, I think that that's the important thing to really think through. Okay, where are we going? What's the trading data say we're going, and where are people basically placing their bets here? And so I think short term, over the next quarter, maybe 2 quarters, there is uncertainty, right? And I think what people are looking at is the frequency of the different announcements coming out of DC, eagerly watching in terms of what the administration is going to do with tariffs and their corresponding effects. And I don't think we ultimately know where those are going to land. The market this week obviously got more optimism with the signals from the administration that they would pull back, negotiate with China, et cetera. But if I zoom out and I look, I think we're expecting and our customers are expecting short-term volatility here. I think it's difficult to have that or to know exactly what's going to happen in the coming weeks or months. Zooming out, though, I do think what I hear from a lot of players is they're looking Q4, Q1 next year and feel like we will end up okay, as you said, and that there's better, kind of market conditions around the horizon. So the way that we see that expressed right now, and just to talk about some of the trading data we're seeing, I think we're seeing good flows into BTC. I think you see a rotation from some altcoins that people may have less conviction in or that are perceived to be more risky into Bitcoin as an asset. And I think you're also seeing market participants look to express their views through options markets and valuing the inherent optionality that gives them, right? So short term, we're seeing a lot of activity both on the up and downside, people looking to buy upside exposure into end of year, some beginning of next year, or further duration even. And on the downside, you see people looking to hedge to make sure that they're not caught off guard. So that's kind of what we're seeing at a high level across the customer base right now.
Yeah, which really says that we are not in a risk on environment. And that is really what everybody who wants the bull market to come back and wants all, not just Bitcoin, but everything to go up consistently. We need to get back to a risk on environment. And we're still not there. We're in an environment where there is a lot of people hedging their risk because of the geopolitical risk that is, I don't need to explain that. We've talked about that at length this
Yeah.
week.
Can I
But
add
it
one
is.
comment
Go
there?
ahead.
Yeah, one thing that I do think is interesting is there's one of our lead traders has mentioned this. With Bitcoin specifically, there's kind of a perspective right now. It's like heads you win, tails you win, right? In
Mhm.
a world where we see more tariffs, more macro uncertainty, and more inflation, right? When the tariffs start to hit, we haven't really seen the price impact day to day. You're going to start to see ships come in from China, like prices go up, assuming that these continue to stay. What we're seeing is Bitcoin start to trade more similar to gold, right? With the perspective that this is digital gold, non-sovereign store of value, especially with all the geopolitical and economic uncertainty right now, that this is an area that we're even seeing sovereign wealth funds start to allocate to, right? And so I think on that side, there's this Bitcoin digital gold inflation hedge. The other side of that is I think that there's optimism that if the market goes risk on, the crypto will rise too, right?
Sure.
And I think that that's a broader market sentiment. But I think the difference is you're looking at BTC as an asset versus the underlying space in the first scenario. Second scenario, you probably get more forgiveness and a greater opportunity towards a longer tail of tokens itself.
Yeah, yeah. It's a great take, which I completely agree with right now. You mentioned when we talk about Bitcoin, whether you call it the Bitcoin decoupling, and we've had this conversation a million times recently. To me, the big thing that would need to happen in order for Bitcoin to truly become digital gold and to be seen as digital gold is we need new inflows of people and investors and institutions mostly who treat it as digital gold, who look at it that way, right? I'm not talking about more retailers buying it, right? I'm talking about these big institutions. You mentioned sovereign wealth funds. What do you think is the current, do you have any insights into the current state? I mean, we all know that like Abu Dhabi bought 500 million of Bitcoin in the first quarter. Is there other sovereign wealth funds that are buying that we maybe don't know about?
Yeah, I'd say that there are, and there's others that are holding the asset too, right?
Mm,
And I think that the question is also interestingly, to your point, I agree. I think a lot of this conversation is around what net new capital is coming into the space, right? And if you take a step back and you even think about ETF performance, right? Like I was thinking earlier this week, Bitcoin ETFs, the quarter before it was announced, so whatever, a year and a half ago at this point, when you're talking to market participants, the bull case most market participants had in their mind in terms of like 1 year out, what's the AUM of these total vehicles was like $20 billion, maybe 30, right? People thought that that would be a strong bull case. What you're seeing is over $100 billion in Bitcoin ETFs, most successful ETF launch in history, right? And I think that's a reflection of a lot of net new money coming into the space. And I think what that highlights is actually the how profound it is to provide net new wrappers and regulatory clarity on this asset. What you basically have with ETFs is net new market participants that could not hold the physical can hold ETFs. Even from there, I think you're seeing an interesting market dynamic with like MicroStrategy, SoftBank Tether, and Cantor's new vehicle that they just announced too, where there's also market participants that can't hold the ETF, right? And can only hold equities. And you're seeing inflows into those instruments too. You see then market participants that if they're not able to hold that instrument, maybe on the debt or fixed income side, they're participating in this market through a convert into those companies. And so I think the interesting thing is across different investment strategies across the capital stack, you are seeing significant inflows into this space and specifically into BTC with that combination of regulatory clarity plus additional instruments that different asset managers or market participants independent of their mandate can basically access. And so I think we're actually still at the early innings in terms of those inflows. We're having conversations around the US government buying BTC. Like, I know you've been in the space for a while. I've been in the space for 8 years at this point. Like, the idea that that would happen even a year and a half ago was crazy. And so I think there's a lot of position for net new capital come in. I think the question is, it will go into Bitcoin, and then what happens to other assets in the space?
Let's be honest, everything in crypto comes with fees. But here's a nice surprise. MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Disclaimer, network and ecosystem fees apply. Meet CS/USDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions. See why CS/USDL is gaining traction at milkroad.com/Coinshift. And I'm going to directly ask you that question, but not yet. Let's come back to that a little bit later in the show. I just have to completely agree with what you're saying and here's my take on it. And we had Adam back on the show earlier this week, and he predicted 500,000 to 1 million Bitcoin in this cycle. Just to give, I mean, he's a permabull, and obviously he admits that, but there is real belief from a lot of very, very smart, very educated people who are saying, okay, here's the setup. We have pipelines, as you said, financial instruments. We have these pipelines that are in place that are new, that have only come into place recently, and that are picking up speed in terms of more and more pipelines are coming in every day. And these pipelines, they're like the ETF. Yeah, we saw way more flows than we expected, but the buyers especially the institutional side, are really slow to get in to
Mhm.
something like Bitcoin because it takes them years to get, depending upon, you're talking about a big pension fund or a sovereign wealth fund, it takes them years to update their mandate, to figure out how do they associate the risk of Bitcoin? How do they think about it? How does it fit within their portfolio? All these things. And so we are still, as you said, early innings. So we have more pipelines. We also have more demand coming, but it's very slow. And we have regulation coming, which is the next topic I want to get to. So you were in DC, the SEC hosted a digital asset roundtable. Tell us a little bit about that experience. Let me pull up this photo of you sitting on the panel here, so we can show you there in DC. Tell us about
There we go.
what were your takeaways from this?
Yeah, a couple things. One, mentioned this earlier, but I think that when I'm in DC now, one of the takeaways that I have is actually just how profound of a shift we're seeing within this market, right? The idea that even like a year and a half ago, a group of crypto execs would be welcomed into the SEC and asked for their perspective on how the market would continue to grow and expand and what we could do to collaborate with regulators to really enable this asset class on a go forward basis, like that just wasn't in the realm of possibilities. And so I think just thematically, I'm very excited about the progress that's being made in DC. I personally think that the market is undervaluing how profound of a shift we are seeing in the US market specifically, both with the potential for market structure bills, SEC, CFTC actively engaging with the view of bringing more activity into this market and creating more healthy and robust markets overall. And so I'm very optimistic in terms of what's happening in DC right now. And I think the takeaways from my perspective is like, look, there's genuine interest in engaging with the space, genuine interest in understanding what it would take to move more activity back to the US. One of the points I mentioned there that I think is easy from a Western perspective to overlook is US is a global, is dominating global capital markets. But if you look at crypto markets today, 85% of volume is still offshore, right? And so if President Trump, articulates that he wants the US to be the global hub for crypto, so much of the work that needs to be done is to actually have a conversation around what can we do to actually move trading volume and more activity back to the United States. And I think it's great to see regulators, politicians, and otherwise engaging and being thoughtful in terms of what it would take to make that happen.
Yeah, it's an interesting take. Has the is this priced in? I don't know the answer to that question. And I get the feeling that you're right that we might not. I mean, we're so underwater because of macro right now, which is just like so creating so much noise that nobody can pay attention to anything else or notice anything else that's happening. But also, yeah, it sort of does. It's happening so fast, way faster than any of us expected. And when something like this, it's almost like I don't believe it, to be honest. I'd say that's probably my one take is I keep talking to, yourself and many other players that are in DC that are having these conversations, and they all say exactly the same thing. Like it's coming real fast. Like stablecoin bill next few months, market structure bill shortly after. We'll have both this year. But in my head, I can't wrap my head around it, and that's kind of what I feel like the market is saying. Like, okay, we'll wait and see if you actually can deliver on this promise to make it happen this fast. What do you think is the likely timing of this?
Yeah, so the conversations right now around market structure and stablecoins happening sometime this summer. And I'm
You think it's
optimistic.
going to be this summer? Like
I think
that's
I
crazy.
hope so.
Well,
But I think we're seeing momentum around that. I'm optimistic that we will get that legislation.
do you think they'll be combined or will they be separate?
Great question. I think that that comes down to like the core nitty-gritty policy making. I've heard recently that there's a chance that they get combined, right? House passes one, Senate passes the other, and then you have a combination of those bills that gets forward. And so I think from my perspective, like candidly, I don't really care how it happens. I think the question is, I think what's important is to have these rules for the road. To your point, has the market priced this in? I don't think so, right? And I think that that actually goes directly to the conversation we're having earlier, right? The Bitcoin ETF wasn't priced in to the market until we saw inflows, and I think everyone underestimated how positive the momentum was around that, right? And how many inflows we got. And I think that the opportunity here, the big question and what makes it difficult to have some of these conversations is we still don't have formal definition around what's a security, commodity, currency, et cetera, right? And that does affect adoption and fund flows. With Bitcoin, we have that. It's a commodity, it has securities instruments around it. People can allocate to that instrument. My hope is that with market structure, we get clear definitions and rules for the road across these. And I think that that should unlock significant TAM in terms of the capital that can allocate to this space, similar to BTC. Now, it doesn't mean that those investment cases will be as good as Bitcoin, right? And I think that the question, and you've seen ETH ETFs as an example, I think the investment thesis around Ethereum and like articulation of that to a RIA or wealth manager audience is more difficult than Bitcoin, which is just digital gold. And I think as you go further down, the market cap weighting probably gets even more difficult to articulate, but it will be beneficial for the space overall. And I think it will actually unlock fundamental innovation in the US market itself if it does happen.
Yeah, I think what we're going to, it's a great point about the difference between Bitcoin and everything else when we go out to non-crypto natives and trying to explain it to them. I think what we're going to see is we're going to see index products really lead the way after Bitcoin when you're talking about what's going to reach the rest of the world and the other asset classes that are like, okay, yeah, I'm in Bitcoin, I buy into this. Okay, now I want to get more exposure. I don't necessarily need to learn about every single crypto asset and what it does and try to understand smart contracts. And, for most people, that's going to be too much, but they'll buy a lot of indexes, I think, which will be great because that will bring fantastic flows and will also probably be safer for those investors because they won't make the mistake of buying some ghost chain and getting absolutely wrecked, which is always a risk in the space. When you think about this upcoming legislation or when you're speaking to your customers, is there any concerns?
Yeah, a couple of thoughts here. Let me unpack them. I think that I would be surprised if everyone is going to love every aspect of any legislation or rules, right? And so I think what will be interesting to see is as these bills are furthered and we get more specifics in terms of what exactly is going to be in them as they go through the drafting process, et cetera, I'm sure a lot of people are going to have different opinions, right? I know that there's been some conversations on Twitter and otherwise around, different market participants potentially using this as an opportunity for regulatory capture, et cetera. Like from my perspective, what do we need? I and FalconX, we advocate for like competitive markets and competition both in the US and abroad. And to the extent that I think we can reach that, I think the space will be in a good place. I'm sure there will be additional regulatory burden that could be could be enacted on companies within the space. And so a lot of the engagements that we're having and the conversations that we want to have is around what are those registration categories? How we delineate the roles and responsibilities of different market participants that are active within this space? How do we make sure that we're protecting investors and institutional market participants, both retail and institutional, from different systemic risk? And to the extent we can get that done and regulators can be thoughtful in terms of not placing in overwhelmingly burdensome regulatory requirements on companies in this space, I generally think it will be a net positive. I'm quite optimistic right now, but I think that the proof will be when we get the final bills and are able to have a conversation around that.
Okay, let's shift beyond Bitcoin to the other 10 million or so coins. I'm kidding. I don't want to talk about all 10 million. Well, let's just talk about the few that are actually fundamental and legitimate. When you, and we could go two directions here. Either I would love to get your views on either specific assets, or we could talk more broadly about emerging crypto narratives and where you see the puck moving throughout this year.
Cool. Yeah, happy to do both. I mean, I can share a perspective in terms of just what we're seeing, right? In terms of trading activity, institutional capital flows. People typically find that helpful as they're building their own perspectives on the space. Won't spend too much time on BTC here. We've talked a lot about it, but I think that has core use case. You're seeing a lot of net new flows that are happening in that asset. I think, and you know this, and I'm sure a lot of your listeners do too, if you look over the last year and if you consider end of last year kind of a mini bull cycle almost, we did see significantly different behavior in alts, right? And I think that one of the catalysts for that, you referenced like the 10 million assets. I mean, I think there's like over 30 million assets that are currently launched.
You think it's 30 million now? I can't even keep track of the number because it's too easy to launch.
It's exponential, right? 2021, I think it was like 2 to 4 million, right? And so you've seen
You think?
such
Oh, I think it was way less. I think it was like 20,000 back in 2021. If you, I guess it depends if you include NFTs. But if
yeah,
I think fungible tokens, I think we were only like 10 to 20,000, weren't we back in 2021? And
yeah,
then it was like this cycle that it was like all of a sudden pumped up fun, boom, millions of tokens.
totally. Yeah, so the numbers may be slightly different one way or the other, right? I don't know that anyone has perfect metrics
True.
on these two, but I think the relative difference is what we've seen a 10 to 15x increase in the number of tokens in a 2-year time period. And I think that what that's caused is a dispersion in liquidities, and specifically on the retail side of the market in terms of where people are allocating capital. And what we see is that capital becoming much more fleeting, jumping project to project, meme coin to meme coin or whatever that is, then kind of building longer term duration positions on some of the altcoins within the space. And so the reason I mention that is I know both across the institutional side of the market, like we work with a lot of venture firms, discretionary hedge funds who hold, significant positions in non-BTC and different altcoin assets. And I think that you've seen a wide dispersion in performance there. Obviously, Solana, I think, has got a certain amount of strong investment narrative that's developed, and specifically Solana versus ETH. Solana ecosystem overall, I'd see is generally getting positive capital flows. And I think from an investment thesis perspective, people appreciate that. And then I think you're seeing a shift right now towards what people call value, which are basically assets that have some sort of cash flow or burn mechanism that enables investors to have more predictability or perception of that in their returns, right? So seeing a lot of activity in Hype, seeing activity in Maker, different core kind of DeFi blue chips, also with the perspective that those over time will be able to turn on those monetization methods. And I think that that's actually quite healthy for the space, right? Like I think my personal perspective, people should be able to do whatever they want with their money. If someone wants to go buy a meme coin, great, go for it. But I do think from a long-term space perspective, I think focus on projects that have core strong fundamentals and are actually doing beneficial things within the space will build a longer term, stronger market, and specifically on the institutional side of the space.
Mm-hmm, mm-hmm. Yeah, it's it's interesting that you bring up Maker or Sky, because we were chatting recently. There is talk that the stablecoin bill will not allow yield-bearing stablecoins because basically the two biggest stablecoins in the world, Circle and Tether, they're not yield-bearing stablecoins, and they are committing the most lobbying dollars to Washington. It would appear that that could be the case. Do you think that that could be likely? Any idea on if that's going to happen? And do you think that impacts Maker? And then maybe we can extend it into a larger conversation of how will DeFi respond to some of these bills that are coming, and will it impact them negatively or positively?
Yeah, great question. So I think that it is likely that yield-bearing stablecoins will not be in this passive legislation, and so that will impact different assets within the space. But at the same time, look, I think that if you look at the stablecoin market overall, I think that that's like when people talk about core use cases in crypto, and some people are like there's no like core use cases. Like I just think that's false. If you look at BTC stablecoins, I'm happy
Totally.
to talk about other examples that I think are working well. But I think that that market has been done so significantly well, over $230 billion in basically AUM on the stablecoin side. A lot of strategic, interesting reasons why the US should be supportive here. I'm happy to talk about those. But then if I think through like, okay, DeFi, other on-chain areas of the ecosystem, I'm not sure how much market structure or either of these bills are going to directly touch on them. I think it's early to have that strong of a perspective in terms of what the ultimate impacts will be. But I do think that, like, if you look at the fundamental use cases that have really done well, it's like the ability to export essentially financial products on chain, US dollar being one financial product that's beneficial for people around the world to hold, right? You're seeing stablecoins get compared to euro dollars. I think that's an interesting comparison. I think that it's great and generally a positive thing for the world, right? For people in emerging markets to be able to hold US dollars versus their significantly inflating local currency, or at least have the option to do that. And on the stablecoin side, if someone can do that and also deliver yield in a risk adjusted way, right? I think there will be continued demand for those assets. And as you know, these are open permissionless networks that I think most people if they're technologically literate, will have access to. And so I think that's the challenge in making in rulemaking here that I think is actually a little bit different from any very different, I would say, actually, from any other asset class. And so I think we'll continue to see growth in like crypto and stablecoin side overall. And I think it's going to be interesting to see, okay, like where does the line get drawn in terms of DeFi and some of these other assets? I would say that I've been pleasantly surprised so far in my interactions with both regulators and politicians that they're actually thinking through some of these. That was not, that was not top of mind for them years ago. But I don't know that we'll know exactly what that's going to look like till probably post market structure. And once the agencies start actually interpreting this and then thinking through, okay, how does this like look at DeFi? I think you're going to see most of the regulation in the beginning on centralized players like FalconX and others.
That's a really great point, actually. And people lose this lose this in like the details. Is what we are getting here is legislation, right? We're not getting regulation yet. So we will get legislation, and then the regulators will come in and they'll say, okay, here's how we're going to regulate this, and that will come over time. So all of this will play out, and then we'll get the judiciary system to come in after them, and the stuff will funnel through the courts and we'll get even more clarity. So it isn't an immediate thing. I think on the stablecoin thing, my view is that it doesn't matter. If yield bearing stablecoins aren't in this, it doesn't matter. I don't think it affects the makers or the skies or the like Athena or any of them, only because they're not for Americans. Like these products, they're not for Americans, right? Like these are products for people who can't get access to a savings account or some form of yield on their dollar, right? In the US and in most of the developed world, you have great financial products where you can very easily get safe, stable yields, right? That's very available. Whereas if you're in Argentina or Venezuela or anywhere in the developing world, that's who these products are for. And there's more than enough of those people and institutions in those places who will still want the yield bearing stablecoin. So I don't think it'll make a big difference.
I completely agree. I think that it's easy sitting in the US to have a very US centric perspective on this market. But if you look at like stable coins and like what fundamentally they have done is, like I mentioned, you're basically exporting a tokenized US dollar on chain and giving people like we serve as a back end liquidity provider, for example, for a lot of what we call retail aggregators. So that's like investment applications, payment companies, basically B2B to C relationships. And a number of those are in emerging markets. And what you see in the trading data there is people look to hold Tether and other stable coins just as an asset, right? And so I don't see that trend going away. And I think that that's actually the interesting trend when you think through stable coins and tokenization is like the ability to export those assets on chain to a wider audience than would have been possible before. And I think that's super compelling and a net positive for the world itself.
All right. Austin, before we wrap here, any final thoughts, any final things that you've been mulling on, contrarian takes that you have before we let you go?
Yeah, I think we've covered a lot of ground today.
Or how about a prediction? Any predictions for this year or for this cycle?
Yeah, so a couple things. Some of them reiterating what we've talked about already. Personal perspective, I think the market's undervaluing how positive of a shift we're seeing in the US itself. I think what we're seeing is it's now become the most favorable, or let's say poised to be the most favorable market in the world. I think that the subtext around that and the follow-on effects are what we should be watching to think through and understand. Some things that I've been thinking through, right? As we referenced, 85% of global crypto volumes outside of the US today. I think you could see some shift back to the United States. And I think that a policy is a potential push for that. I also think there's an interesting conversation we should have as an industry about whether there's regulatory reciprocity that could be granted across different regions and you could actually have global crypto flows. And so I would be excited if that was the case. I think there's a few regions where you've seen kind of I'd say a higher concentration of companies in this space and more favorable regs, whether that's UAE, Singapore, or otherwise. So I would be watching that. I think that that could be interesting. And I think that what you'd see there is where the US has been behind. Interestingly, CME is like, 20%, I think, of open interest in Bitcoin futures. The number may be slightly off, but approximately. From a trading volume perspective, much less, though, right? And so I think that if we're looking at derivatives markets, I think there's an interesting conversation around what's going to happen onshore versus offshore. A lot of our focus has been, we've a CFTC regulated swaps dealer, so we deal regulated bilateral derivatives. In the US, we've seen huge growth in that market. I think if there's an opportunity to basically combine US and global liquidity, it could be very compelling. And I think that that would move the space forward. And I'm optimistic in terms of, I think the net new market participants that are coming in. I think we sit in a very fortunate seat to understand like what and see around the corner. Everyone's watching macro right now, and we'll see what happens there. I think everyone's guess is as good as the other person's. But if I look out 12 months, 18 months, I think the interesting data that we see here is like by far the strongest onboarding pipeline in terms of profile of institutional market participants we've had in the history of the company over the last 7-8 years at this point. And I think the question is what happens when all those people are in the space. What's exciting to me is if you get also additional people that are building both established companies and net new startups, and that if regulatory clarity in these net new capital flows can actually catalyze fundamental innovation within this space. So that's what I'm watching right now, just a couple of off-the-cuff thoughts.
Wonderful. Austin, thank you so much for joining us today. Greatly appreciate your time.
Appreciate it, Jay. Had fun chatting.
For sure. Thanks for listening in, everybody. Have yourselves a wicked awesome day. We'll see you back again tomorrow. Thanks for listening to today's episode, folks. Before I let you go, if you're looking for something to do this weekend, you and your lady or your fam are hanging out, cuddled up on the couch, highly recommend the new documentary, Vitalik, an Ethereum Story. It's a documentary where a bunch of filmmakers, award-winning filmmakers, incredible documentary, high class, really, really well put together. They follow Vitalik around for a few years and document his life. They get into his backstory, his childhood, what he was like, some incredible stories of him as like a 7-year-old developing spreadsheets in this whole world. His mind just works in incredible ways. Highly recommend, whether you're invested in Ethereum, whether you love Ethereum or you hate Ethereum. I know there's a polarizing view on that. Doesn't matter. It's a great film that will really open your eyes to Vitalik and to the future of crypto as well. Check it out. Link is in the show notes. You won't be disappointed. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.